Now, let's get a check on what's playing out in most of the markets we track, starting with Africa. We see the NGX at intraday today still, trying to make a decision. But we're seeing 0.17% up, 97,401 points for the all-share index. South Africa is not looking bad, 0.19%. So hopefully we'll see if we get a positive close. That's for the NGX, the close of trade today. But Let's talk to Senator Al Dunaz, a fixed income dealer at Axis Bank. Great to have you, Senator.
Thanks for having me, Laddie.
So first off, I'd like to get a reaction on the latest inflation data. It's higher. I guess that's with consensus as the expectation, from most of the analysts. But how are you seeing this data?
Yeah, so we recently saw the National Bureau of Statistics release the inflation figures for October. We saw a rise in those figures from 32.7% in September to 33.88% in October. This is largely in line with the expectations of market players. We had expected an increase in the inflation rate for last month. This is largely as a result of mostly fiscal issues, the rise in the petrol price, and the continuing depreciation in the currency. These are interesting stats in that we have a bond auction coming up next week, and I expect the Monetary Policy Committee to meet upper week, that's the 25th and 26th. So it will be interesting to see how they interpret this data.
And how's it going to play into the fixed income market?
For the fixed income market, as this was largely the expectation of most market players, is we've not seen any much panic in the market. The market has continued to trade as usual. Across the Treasury bills desk, we've seen a bit of a bullish sentiment across the long end of the curve and a bearish sentiment across the mid-tenor securities. So we're seeing market players switch from the mid-tenor securities to the long-tenor maturities. To give you some color on rates, we've seen some of those mid-tenor securities trade at around the 24% handle, while the long end of the curve has traded just above the 23% handle. On the bond side, the on-the-run bonds have been the most sought after, particularly the 2031s. We've seen that bond trade at around 21.3%. That bond closed at the auction at 21.74%. So we've seen sustained appetite on that bond. On the 2029s, we've not seen much interest on that. So it has largely remained around the 20.75% that it closed at the auction. As I mentioned, there's an auction on Monday. So the DMO is expected to offer these two bonds, the 2029s and the 2031s. We expect that the auction will be oversubscribed as usual. The amount on offer is between 80 and 100 billion per bond for a total offer of between 160 and 200 billion across both bonds. So we do expect that the yields across both bonds will remain at where they closed at the previous auction.
And how do you see this latest inflation number, impacting what the operations we see with the CBN, doing in the fixed income market? How much pressure does this put on the CBN?
Absolutely. The CBN has largely tried to tackle the continuing increase in inflation by adjusting the MPR, the monetary policy rate. So we saw that at their last meeting, the MPR was moved to 27.25%. The CRR, the cash reserve ratio, was raised as well from 45% to 50%. So we might see that the MPC committee, the Monetary Policy Committee, would look closely at those figures to see if there's anything that can be done on those numbers to try to rein in inflation. But a lot of analysts are saying that a lot of these issues, the issues that are leading to increasing inflation, are mostly on the fiscal side. That if we were to tackle some issues on the fiscal side, we might see some gains. But that, of course, doesn't mean that the CBN would fold its arms and just let the inflation rate continue to slide. We do expect a reaction from the MPC and the CBN on Monday, not the coming Monday, the upper Monday, 25th and 26th. We expect a reaction from the committee. In regards to the fixed income market, there isn't really that much that can be done there, but we've seen the CBN continue with its OMO auctions. So a key contributor to the rise in inflation rates is, of course, increased money supply. So we've seen the CBN maintain its OMO auction to try to mop up excess liquidity as it rises, and that has, of course, yielded fruit. We've seen the market remain in negative, in a collective repo consistently. So yesterday we saw that figure at just under 220 billion, although today we've seen that figure come to the positive side at about 200 billion. We do expect that the CBN would sustain those auctions to try to mop up any excess liquidity as it arises.
And it almost seems like as the CBN is struggling to mop up all of this excess liquidity, something keeps pouring it back. Well, let's get a check on the recently we celebrated the FX reserves hitting about 40 billion, hitting that level and, regaining it after a long time, nearly 3 years. So do you see this accretion, continuing? And at some point, will we see impact on the naira and the FX market?
Yes, and in fact, we have seen the efforts of the CBN contribute to FX stability. We've seen the CBN continue its interventions. The CBN has been in the market this week to sell FX to banks to try to match the demand that we are seeing. So the key issue in that space is that the demand has continued to outweigh the supply. So the CBN has stepped in at times to try to offset some of this demand. The CBN and DMO have also continued to raise dollars in different ways. Yesterday, we had the announcement that the Ministry of Finance, the DMO, will be looking to come into the market to, of course, issue a Eurobond sometime soon. We are waiting for more details about that Eurobond. So an effort like that will, of course, increase the war chest that the CBN and DMO has to stabilize the FX rate. To give you some color on where the rates are currently, they're still under 1.7. We've seen it at this level for some months now. The FX rate closed at 1,679 naira 91 kobo yesterday. And we've seen the CBN continuous efforts to, of course, keep that rate stable. Apart from the efforts by the CBN itself, they have also continued to issue those home auctions at elevated rates. We saw the last rates print at above 24%. At 24% discount rates, those yields are above 30%. Those are rates that are hardly obtainable anywhere else in the world. So the CBN and DMO have kept those rates attractive to attract foreign portfolio investors into this market, which of course results in increased foreign exchange and a maintaining or an appreciation of our currency.
Yeah, definitely not easy keeping those yields attractive. But what do you see for the naira next week? Any surprises?
For next week, in line with the trend, we do expect the CBN to, of course, come in to intervene. So we expect the FX rate to remain between 1.6 and 1.7. We don't expect it to hit 1.7 because we've seen it maintain its levels at just above 1,600. So we do expect that the CBN would, of course, keep it stable at those levels. There's also the bond auction on Monday, which should be attractive to some investors. So we might see some dollars come into the market ahead of that auction on Monday, which settles on Wednesday. So we might see a slight appreciation in rate.
Senator Audu, thank you so much for coming on. Fixed income dealer, Axis Bank. It was great having you. Happy Friday.
Thank you, Ladi. Happy Friday.